Welcome back to Market Mastery, the only hour you need to get a hold of this market and put some money in your pocket. You can see across the bottom here, some of our picks are exploding, absolutely exploding. Those of you that are in the Discord have most of these. And if you're not, then you need to be following my guys here. His email list, you can find the link in his bio. That Celsius pick, you absolutely nailed it. So cheers. He gives that to you, and I think it's 2 days later. Shit's up 20%. Unbelievable. We have a lot to cover today. The macro markets, we're going to talk what's going on with this huge move to the upside. SPY again pushing to new highs. We're going to talk our options trades for the week, map out our bullish and bearish scenarios. We are, of course, going to talk Tesla because that chart is ripping, and we gave it to you early. We're going to talk Rocket Lab. Chart is ripping. We're going to talk Celsius. Chart is ripping. And then we're going to wrap it all up with a little bit of smash or pass where you guys give us the picks that you're watching, and we give you the yay or the nay. To tell you just how good or how bad your eye is trained. So welcome back. Let's share with the good people.
Let's go.
Absolute falling knife. I mean, this was, you described it, I don't know, the last time we were talking maybe a week ago, that this opportunity was unprecedented and it was as close to free money as anyone will get. So, I mean, how much did you capitalize on this? Well, what do you, I asked you this the other day, but I think it'd be good to reiterate. What do you think were your three best decisions in hindsight on those very red macro market days? Which three names did you take the most advantage of?
Yeah. So, again, the tantrum of, I think it was August 5th was the date. We'll remember that. I was like, the VIX exploded. I've never seen the VIX explode 200% in one day. And it was approaching COVID high level fear. And I was like, this is an opportunity. This is a totally different climate than it was 4 years ago. So I went hard. I emptied all my cash, 6% cash position emptied. I went on 20% margin while on vacation on an island looking for wedding venues. Like I had to trade because this is like a generational buying opportunity when the VIX explodes to the 60s. Top three purchases I made. I initiated an Nvidia position in my long-term growth portfolio at $92.75. I posted in my Discord group. I posted in my subgroup. Like, there's proof of it. I have 150 shares at $92.75. It's up 40% in less than 3 weeks. And it's a $2 trillion company I initiated. All that fear that everyone always had in Nvidia of like, oh, it's ran up so much. Like now the rug's getting pulled. It's going to return back to the mean. It's a cyclical business. Like you guys are all schmucks for holding it for that long. Blah, 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 blah. When and Austin, we've both been saying like in this baseball game of the AI, we're in the third inning of Nvidia's dominance, not the seventh or eighth. There is plenty of room. And I anticipate Nvidia having this dominance for like at least 2 years. So that's definitely a 40% move on a long-term position when I just initiated. Huge W. Second one was Palantir. This happened, I think, the day of Palantir's earnings, maybe the day before. So I was able to scoop up additional 10% shares at $21. I think right now it's trading at $33 or close to it. Again, I've wanted to beef up my Palantir position for quite some time. I got an overweight position under $10, and it's obviously nearly tripled since then. And now it's a 10% position in my growth portfolio, but I want more. I want this to be like 12 to 15% because I am so confident. And I think the market's now pricing them this way as well. They're going to be the leaders in the enterprise AI space. They will. Not just that, they also have an insane second leg in growth for AI in the government side of their business, in government IT. So like I wanted as much exposure as possible, and they were not giving me the pullbacks that I desired to enter and add more because that's such an insane cost average. But I was able to add a 21. Third position, which hasn't ran as much as I would want, but I'm happy I initiated a position in it, is Amazon. I think Amazon will be fighting for Nvidia as a spot for the $10 trillion club. I don't know which one's going to hit there first, but I think both of them will. And Amazon right now is just basing nothing wrong with their business. I know there's a lot of fears of the recession is going to hit their e-commerce side of their business because you saw the operational margins go from 10.5% to I think below 10. And that scared a lot of people off. I could care less about their e-commerce business. You know why? It's because their AWS business alone is worth over $1 trillion, $1 trillion in my opinion. And because I could care less what it does. I'm all about they're the king of cloud computing, which is on fire right now due to AI and is not going to go away anytime soon. because we're still in that AI related investment phase of the digital economy. And they're not even writing off the automation warehouse capabilities that Amazon will be able to provide down the line, which will be bonkers, in my opinion, for the operation margins of their e-commerce side of the business. And it's just, they're gonna be a monster company. They're worth like less than $2 trillion, I think, right now. I don't even know what their valuation is. I just think they have a ton of runway if I believe they're fighting for Nvidia for the $10 trillion club. So like those are my top 3 purchases. I was like, yes, definitely loved it. And we're benefiting off it. Like a lot of people are like, you should start trimming if you went hard on that market tantrum 3 weeks ago.
Yep.
I'm not. Look at the chart in April when the SPY had a similar like dip and broke the 21 EMA on the weekly chart. What occurred? Low volume up to the right for 2 or 3 straight months. I don't know if we're going to get that right now because of the seasonality weakness we have in September, October, but I think we're still in a bull market that's going to be continuing for at least until next year. So I'm holding.
I love it. And I think the Nvidia scoop was a big one. That was a huge win. You can't beat that when you're getting shares. We had it mapped out ahead of time. When you're getting those shares coming down to our trade off of 90, 91, I mean, it's just unfathomable, in my opinion, to get that kind of deal. So let's get the chart up here. Let's get the chart up here and let's start talking. I mean, let's talk S&P because I think S&P is unbelievable. I mean, today, for those of you in the Discord, we crushed it. We took advantage of every second. Last week, we mapped this out for you. God damn, it feels good. We told you above 556, we're heading to 559. So let's take a quick peek at how those calls did. I just had that pulled up here. I do believe they're up 250%. Let me pull that up. Where's my screenshots? Let's get it up in there. Did anybody take that trade? Breakout over 556. So the 536 call that we were talking about, or no, not that. Yeah, that was 2 weeks ago. That's up 276%. We took about 100% on the overnight lottos. Then we took an active day trade that I updated in the group. And we brought in, I want to say we ended up around 45, 50% on that. So this move was easy to see. And the next one is, I would argue, even easier to see. It's a $5 move to the upside to 563. Or we head back down to trend support, so 555. So either we wash out from 559, come back down, or we break out and we go to 563. So these trades are going to be pretty straightforward. I'm going to flip these screens here. Stop screen. Let's go to the options chain because we don't even need to get all technical with it right here, right now. So we're going to type in SPY. And we are going to go to options chain. As always, if you are a little bit more consistent in the strikes and the expirations, you'll be a lot more successful. We want to give ourselves more time so that these contracts don't go to zero immediately. We're going to go a little bit shorter time frame because these are going to be high confidence moves. They're very either or here. We're not chop sideways. We are either or as we stand right now. Posting a new high, I believe, would break the record. Someone, I don't remember who that was, but we were on Spaces earlier. Somebody was talking about how 8 consecutive is best case scenario. Is like fantastic. 13's best case scenario, but that would be unprecedented. Correct?
Yeah, that's exactly what they said. And specifically, if it clears 361, this will gamma squeeze up hard. There's a lot of like liquidity about it. So like I think that's like pairing of like we have 5 days essentially to get to that 361 level. If we do, we might get that gamma squeeze. Will Friday's
What are you talking about? The S&P?
Yeah, S&P.
So 563, you're saying?
561.
Okay.
That's the gamma squeeze level.
Oh, interesting. It makes me want to just buy one of these as a lotto and just see what happens. Which maybe we'll do that. But again, our target's 563. So if we want to be right at the money, that would be these 563 calls for August 30. On the breakout over 559, that's when I will initiate this position. Once we get the confirmation on the 15-minute chart, let me show you what that looks like. Let's go back here to the other one. So we go back to the chart here. So here's what we need to look for on the 15-minute chart. which is, I would say, the most trustworthy when we're getting into the day trading here. What we want to see is this candles to break above 559, come down and touch, and then candle close over that level. Candle close over that level. Once it does, easy move to 563. So that's what we're doing here. Now, the bear scenario is candle gets rejected, hits its head on 559.5, and closes below. Okay. Once we get that, then we take the downside trade to 555. So we're going to be doing that same expiration, which is, I believe it was August 11th. August 30th. That's 11 days, except we're going to go to the put side, and we are going to go to the 555 puts, which are priced at about $300 a contract right now. We will initiate that position. I will be initiating that position when we get the candle close below this line. So it hits its head, comes down on candle close. I am going to take that put trade, bearish trade. If the candle breaks back up after closing, that's my stop loss. So that's how easy this is. 559.5 is our stop loss either way. If we're on the upside trade, that's our stop loss. If we confirm above, we enter the position here, and then we go up a little, and then we break down, that's our stop loss. If we're in the bearish mode and we test right here and come down, and then we break back up, that's our stop loss. It's that simple. You put one horizontal line on your chart, and you are prepared. I'm going to make myself hopefully full screen here. I got to make myself full screen. This is ridiculous. I don't know if I can. Whatever. This is big enough. This is so fucking simple that with one horizontal line on your chart, you are prepared for a minimum risk, maximum reward trade, both bearish and bullish on the S&P trading options. You have the exact contract, everything you need to know, the strike price, the expiration date, where we're going to enter, what makes sense, where our stop loss is going to be, what our target is. There's no possibility that anyone should lose more than a very, very minimal amount taking these trades. They have won over 50, I think it's 54 weeks in a row. This strategy has produced a winning trade of at least 100% for the week. So you do the math. I don't know. You do the math, you know? So that's my call out to you guys. Just put this one level on your chart, map this one level, track this one level. All your trades are done. Human emotion has no place in this trade because you've mapped out the critical price levels that must occur in each way they're going to for this trade to be validated and then make sense and make you money. Again, if you have a system that can be replicated, you'll be very successful. You will make a lot of money. Him and I both made a lot of money. You want to know how? Tell him how.
Keeping emotions out of it and sticking to the charts.
Replicate the system, man. Replicate the system, okay? And just to be radically fucking transparent, because I can't stand most of these motherfuckers on here. This is the year today. I ain't gonna hide shit from you.
Damn.
93%, 85 grand. It did, obviously, clearly, you saw that dip right there. So I lost 40 something grand. Not lost, but 40 grand poofed on that drawdown. And unfortunately, I didn't put enough dry powder to buy enough of what I wanted, but came back to me as it always does. But again, this is what you'll see in this strategy if you just do it. Very simple. I just want to give everybody the map. Come here, spend an hour of your time, pay $0, make money, be done. Bada bing, bada boom, huh? Come on. Come on. Nah. All right. So I think that we're covered on the SPY. I mean, you hit the chat. Yes, no? Are we good? Are we covered? Does that make sense? Like, please give me some feedback. Yes or no? I can't know if this makes sense to you if you don't tell me. Otherwise, we're just going to keep it moving and talk about our darling pick. So let's get into it then. Let's give our good friend here a nice golf clap. Everyone, let's give Mr. Shay here a nice, let's put on the daily chart, and then we're going to give you a little golf clap. Serious, I want everyone to golf clap right now. Sorry. So this is where we got the opportunity to buy in. So now everyone, golf clap this gentleman for one hell of a pick. Unbelievable, man.
Appreciate it.
What are you seeing here?
So first off, it's just
That's
great to be
crazy.
validated because I've been adding like a madman for a while in the fours and under $4. Like if you look widen out the chart, like it's been basing for like I don't know, it feels like years. Yeah. Oh my god, it's been basing for quite some time. But I was again super happy to because I was accumulating like non-stop that I was able to get actual decent amount in my growth portfolio, and now I'm seeing the position alone is up like 70% for my cost basis. And I'm treating this as like I'm a private equity firm where this is a Series B investment. Space economy is so in the early innings. Like if I mentioned earlier that AI is in the third inning of their ball game. Rocket Lab is just they're stretching before batting practice. It is so far early in that thematic. But again, Rocket Lab is part of a duopoly with SpaceX in the space economy. And they weren't being priced that way in their stock for quite some time because they weren't profitable. Either way, I think ASTS ticker finally brought some eyeballs into the space economy sector because it's gone up like what 1,000% the past couple months. So clearly that's going to have eyeballs into like, oh, wow, what's happening? Is space like actually a real kind of industry that we should probably pay attention to? Then once you look at ASTS, the inevitable leader that's public leader in the space economy is Rocket Lab. So I think a lot of attention is going there. Like, wow, they're realizing how undervalued it is. Where Space Mobile is being worth $10 billion, and Rocket Lab still, even after this move, is worth $4 billion. Where Space, I want to talk about that much about Space Mobile, but like they kind of do only like a part of what Rocket Lab does as a whole. Rocket Lab used to just launch satellites. Now they're a full-on space prime, where they're essentially they include the launch services and space system. They're creating the infrastructure right now in the space economy, but they were still being priced as just I don't know, a satellite launching company. That's not the case anymore. It's a totally different business. A recent information that we found on their earnings report was 64% of all non-SpaceX launches were Rocket Lab. Tell me you're a duopoly without telling me you're a duopoly. That's just right in your face. Okay, it's a reality. So again, I do think that Rocket Lab, we made the comment where Palantir in the 8s, the way it was trading, Rocket Lab in the 4s had a nearly identical charts. And both, like when Palantir was in the 8s, AI wasn't really an AI. Like for the mass retail audience, nobody really knew about AI and LLMs before the ChatGPT moments. So when Palantir was in the 8s, this was before ChatGPT. So everyone was like, oh, AI is just like some fugazi, like it's way out there. Like this is just a black box consulting company that's saying AI. So it was being treated that way until it's ChatGPT moment happened. And then Palantir launched the AIP bootcamp and it just took off because that fugazi turned into a reality. Space economy eventually is going to catch a bid because that is the next frontier after AI and quantum computing. And the market's a forward-looking mechanism. They don't know how forward-looking, but if space economy needs to start getting people want to start getting exposure into that next frontier, like space economy, Rocket Lab's going to get an infusion of volume because they're the clear public leader right now in the stock market for the space economy, in my opinion. So once it took off like it is right now, it's finally breaking out that multi-year base. And what do Austin and I say constantly on basing? Like as wide as it gets, the more velocity it is once it breaks out. You're seeing that right now. I really wouldn't be surprised if we break $10 by the end of the year, and then we start basing then. Because again, going from 4 to 10, love it. I don't love seeing that without some kind of basing occurring. So I do think it's probably going to get to 10, start a little basing in, and like maybe a couple quarters into next year. That's when we take up to 15 and 16. Very similar fashion as Palantir's chart looked a couple years ago. Like, again, history doesn't repeat itself, but often rhymes. And these two companies were very early first mover advantage and very early secular growth themes like AI and space economy. They're going to have similar kind of characteristics, in my opinion. So that's what kind of seeing right now. And again, it's great to see it. It's been I love being the first one there. I rather like be first than last, like first thing and see the move and then get in. I know a lot of people like to like add to their winners. I like being first before anyone else sees it because I get to build a real cushy position and then watch it run like it's been right now. And sometimes opportunity cost is hitting me. Like again, Snowflake right now, I'm being the first one to see what they're going to become in the enterprise AI space. That's hurting me a bit this year, where it's just basing and it's going lower and lower. I could care less. I'd rather be first and building that position. But Rock Lab again, like great to see it. I know a lot of people are saying like, oh, it's just a shitco company or it's like it's SPAC season and any SPAC is just taking off. That might be the case, but Rock Lab has a fundamental thesis behind it on why it belongs to be higher. Like it truly does. It really, really does. And it's growing a crazy amount on the top line. And it's about to have profitability by the end of next year. Their Electron, like I said, was 64% of non-SpaceX launches. And they haven't even like the juiciest launches hasn't been introduced yet. It's going to happen in the middle of next year. So like it's really early innings. I'd love to see it. It's going to be a mid-cap company, in my opinion.
We're the same. I don't wish to be like, I don't care to be riding the train with everybody else. I want to slap a fucking 4-digit percentage function of percentage return and put it on the table and let them know I was willing when you were fucking scared.
Yeah.
Because I did the math. I mean, this is what business, look what entrepreneurship and business in general. One person takes the risk.
Mm-hmm.
Right? It's the same idea here. Trading is a business, you guys. You're investing in yourselves by being here, taking this time. You're getting smarter. You're wiser for being here. You're getting different opinions. You're making stupid money. Cools. You shut up right now. You're up 1,000. You bought. What'd you do? That's got to be an options trade. Well, there you go. So you could be just here following this, and you could be the guy that's up 1,000%. You don't even have to be the guy finding the trade. How beautiful is that? That's something else. So you got to let me know in the comments. I'm assuming you traded options on it, but nevertheless, man. So nice.
I love it. And
nice. I want to know how much you made. How much did you make at the end of the day? Did you turn like $100 into what? What'd you put into it? He's keeping it a secret. I love that. But see, that's the point, guys. You get in on the right trade at the right time. It's all a function of risk reward, right? Let's say I'm willing to let the whole position go to zero and I put $500 in. Well, I damn well better get 1,500 out of it. That has to be the profit at the end of the rainbow for me. 1 to 3. If I risk $1, I better make 3 if the trade goes right. We're never going to predict every single trade with 100% accuracy and never be wrong. Any fucking FinTwit guy or guru, whatever bullshit tells you that, dude, no one's right that much. It doesn't matter who you are. Because you could be right and still be wrong. That's the best irony in the stock market. Great earnings, huge growth, forward guide is really strong. Boom, market takes a shit on your doorstep. Because it happens, man. It happens. So I don't know. Anyway, Rocket Lab on its way up. We already gave you your targets. This is our be-all, end-all projection here. We were shooting for a 275% run reversion to the golden mean. That is our 0.61 fib from its high to the lows. Remember, when you use Fibonacci, you never map from low to high. You always map high to low. You always go past, forward to present as much as you can. Get as much time data in there as possible. Go from the high to the low. That's how you map it out. When you find these bottom dwellers, which I'm not giving you the full secret because then, hey, I'm just not. It's my recipe. You find ones. He's absolutely right. Palantir, all these huge, Robinhood even, we're going to set up right there, dude. Same thing. Look at that. Same setup. Now, this one's already played out, but I made over 1,000% trading options on this one. Same setup. They all play out. So again, the key here is what we give you in this is we give you the formula, the template, the model. His model, you just don't have. I don't think you're going to have. So you're not going to be able to calculate the fundamentals at that rate to understand if fundamentally it's positioned. And then you come here, you're not going to have the appropriate strike and expiration date to maximize your return and get those 1,000% bangers. Because you buy that option a little bit too soon, you're dead in the water. So let's keep it moving here. Rocket Lab was a huge winner. Again, we gave you our targets. Join the Discord if you want the full write-up You can find the link in Shay's bio. I think it's just that. You want to just type your deal in the chat, just add Stock Savvy Shay, pop it up there.
Yeah.
Links in his bio, so go get it so you can get the full write-ups, all the deep dive stuff, the stuff you're not going to get on Twitter or anywhere else. It's free, so get it. It's fucking free. I don't know what else to tell you. No one's asking for anything. Just get it.
I will say I did I copy and paste it off. So let me know if I misdid it because
it's in the link.
That doesn't look right.
It's in the chat.
I will say I added a new position last week in my growth portfolio. I didn't reveal it, but I am Wednesday nights. I wrote my I just submitted it actually right before this call. My deep dive on this company. I think it's a 5x by 2026. I think it's totally under the radar. Funny enough, like I posted on my Twitter, like I just added this position. I think it's gonna be a banger. Can anyone guess? 190 guesses. Not one guessed it correctly.
Stop it.
That makes me think how under the radar it is. And I'm stoked by that because, again, I love being first and I love finding it and building my position before anyone else hears about it. And that's perfect proof. I think that's what's occurring right now. And I'll give you another caveat. Give you a little hint before guessing on Wednesday. Stock's up 7% today. And that's all. Find out Wednesday night on the send out, but it's going to be a banger.
191 guesses, you say?
Let me see. Let me double check now.
Told me. If you ain't first, you're last. What the hell are you talking about? Well, you told me that day at school for career day. You came in and you said, if you ain't first, you're last.
There you have it.
That's actually how I feel all the time.
There you have it. There you have it. So I had to pop that up. So another one that's absolutely crushing right now. Tesla. I mean, we broke this one down on stream a million times. There's not much to say other than a quick, I know I got some questions on the analysis of the price action. So we'll save the fundamental stuff because, him and I could get talking about this for 45 minutes and then you don't get anything out of this. So we talked about this being the bottom, this being the top, a breakout over 203. We have a clear road to first stop 246. It's our first stop, first point of resistance or contention. Next stop being 265. If we break 265, we're heading to 300 plus. It's done. It's over. It's happening. We've talked a lot about how this could easily happen in anticipation of the robotaxi announcement. I believe that is mid-October. We have been crafting some options trades around this. I know Ethan traded this live today. Get in the Discord if you want to watch those live trades. Follow them alongside. See the over-the-shoulder view with the exact contract and details that we're trading. You can get that. But other than that, I didn't want to go and take too much time. We just know we're really just waiting for 245 and then 260s, and then we'll reevaluate from there because we're long and strong, baby. We added this bad boy at $140. So this is the beauty. We get to just sit and enjoy being very green on a position that we love long term. And hopefully, if you've been following this stream, if you haven't, if you're on YouTube, click the little thumbs up and then hit the bell to subscribe so you don't miss the next one. This one's going to be easy peasy. So in an effort to keep it moving, let's get right on to it. The one, the man, the myth, the legend, Nvidia. Look at this, just absolute greatness. Yeah.
Wait, everyone who's live, if you're listening live at the conference that we had, that Trading Paradise, was it 3 weeks ago?
Yes, 3 weeks ago.
Post your gains on that option call out we did live. I think they might be up 200%. And this is the December expiration. We got some time to go. Like I think we got that at 105.
Yep.
Just 3 weeks ago. 150 strike calls for December 20th.
That's why I mapped the trend line.
Yeah.
I gave them all this trend line. This is if we break, we're done. We were sitting there at the end of August right here, right before the breakout. We bought it. I believe it was the close right before the breakout the next day because it boomed. It was up.
Yeah.
There you go. Tammy's dropping it, 187%. So that one option from Traders Paradise paid for Traders Paradise. How about that? That's pretty cool. But yeah, Nvidia is absolutely booming. Mine is personally up. I think it's 100. I did a slightly different strike, but it's up 180%. Yours was more appropriately timed in terms of the strike. You picked shorter and it collapsed. So we broke out here 129. So for those of you looking, following Nvidia and probably chasing it and losing money, let me help you not do that. And I don't say that as an insult. I did it too. I just want to basically be straight with you. Like a lot of people around here losing money. Our goal is to help you not do that. I don't want anything from you. I just want you to pay attention. The better you trade, the better the market is. The better the market is, the more money I'm going to make. So let's get into it. So we got a breakout right here of our ascending trend. We achieved that breakout midday today when we broke 129. So what we know now is that this is our new support for us to follow. So it is still bullish as long as we are trading on the support. This upper range right here has so much upside, so much upside. So basically, we are heading back to 140. Sonny's Gadget Reviews. Yeah, I got shares at 138 last month. Opposite timing. I agree. So we were buying shares of this at $18, post split adjusted price. Basically $20 a share after if you count the adjustment. So, Sonny, we're going to take care of you. Why don't you get on in there, get in the Discord. You'll never have to grab that bag without knowing ever again, my friend. I'm glad you found us. We're going to get you right as rain. So we consolidate here and we keep our trend line. We're golden to 140. And then we want to just continue watching as we approach our point of confluence, which is our most likely target to hit, which is 140 right here. And then as we zoom out and we focus more long term, we see a beautiful little pocket right here that puts us 160 by, it's not giving me dates. What the hell? It gives us 160 by December of this year. Hence why I bought the March calls instead of the December's, because I was looking to swing this out a little bit longer. But all roads right now are leading to this outcome. This is the inevitability. It's 171 by 2025, which puts us 155 by end of 24. All roads leave here. Anytime we get this kind of expansion gap like this, and then we break above it and we form two ranges, this becomes a sandwich where that midline is your most likely outcome. So this right here is the most likely outcome from a technical basis. Here's the beauty of this right now. We're not even in the middle. We're on the upper band. Understand why that is so majestic. Because that means that if our midline we're shooting, midline is still 170 by early 2025, then just imagine what that means in the short term should we continue to have strength on the chart. In my opinion, that could put us between 170 and 180 by the end of this year with strength, right? So like mind-blowing earnings, absolutely. This is a good question. Personally, I would be ill-advised to myself and you if I focused on tomorrow. Tomorrow's irrelevant. If you want the day-to-day, again, join the Discord. Ethan is live day trading these names every morning. He's going to be your guy for that. We're here pretty much to map out the fuck you 10-bagger trades. Day trading is great. It's just not what I focus on, man. So as far as tomorrow, I mean, we're extremely bullish. We broke into a new very bullish trend zone. Take it for what it's worth. 140 is where we'll bump our head. Do we get it all tomorrow? Maybe, maybe not. But right now, extremely bullish. So that being said, you can follow that Discord link. Again, Ethan's your guy for the day-to-day day trades. He's doing it every morning and crushing it every day. I mean, he did it live for everybody. I loved it. But that's what I'm seeing for Nvidia. What are you thinking for earnings here? I mean, this volume is tremendous coming in right now.
Yeah, I think they're going to destroy their earnings. Nobody knows about their guide. That's all that's going to matter. However, like, did you guys see AMD's news today? I think this like justified how much of a dominance that Nvidia has. If you're an AMD shareholder, you might want to like put some earmuffs in, because I think today was I'm looking at the company. Classic sign of panic. So AMD acquired ZT Systems today, rumored for $5 billion in cash. I think 75% of that's going to be in cash, 25% stock, but essentially $5 billion to acquire this server building company. They essentially just use up all their cash to acquire the server builder company to pitch, I think, to the market that they're creating this whole ecosystem for the data center. They have the GPUs. Now they're also going to do the server builders as well to create this like fluid server integration by going through AMD. I've been very vocal. Servers, they're nice, but you need some kind of suite of products associated with them. HPE, Dell, Super Microcomputer, like this is the competition for ZT systems. And I've always said like they're highly competitive, low margins, like not scalable businesses. Like I don't love them at all. And AMD just spent nearly all their cash to acquire the server building company in order to like kind of reframe them as like they have a whole ecosystem now in data centers and double down on their push towards AI data centers, like that kind of narrative. I think that's kind of why they did this. But if you're like a long-term shareholder, I'd be pissed if AMD used up all that cash for servers. It just does not make sense, but also shines some light that Nvidia is so far ahead of the clear number 2 AMD that you can see AMD spending $5 billion on this company. That again, once they announced that they're building for $5 billion, they also announced that they're going to fire 60% of their workers. So that's, I don't know, I think it was like 5,000 workers. They're going to only keep like 1,500. Okay, so that revenue that you're seeing, that's going to be slashed as well. Like, I don't know what kind of synergy they're envisioning, but this is not it. And Nvidia has the software component as well into their whole ecosystem, which is far more lucrative and higher margins than a server low margin business. I think this reeks of panic, in my opinion. They're a clear number 2. They're not competing in the innovation front on GPUs like Nvidia is. Again, Nvidia Blackwell chips getting pushed out of 3 to 6 months, but it's still going to happen next year. And after Blackwell, there's going to be another innovation, and AMD can't keep up with the GPU front, so they have to kind of angle themselves as like, oh, this ecosystem player in AI data centers, where really I think it's all smoke and mirror, and it's not really going to be that accurate, beneficial in my opinion for long-term shareholders for AMD. Like I do not like this at all. I get the narrative that you want to say you're going all out for AI, but this was not the move. I just don't see it unless there's some more details that come to the public that I'm unaware of. But this was a fail from AMD, like a big fat fail. Like it is, holy shit, this was dumb. And I hope I'm wrong because I always love rooting for their underdogs. But this was not it. I don't know if you saw the news, Oz, but I was even shocked that it caught a bid pre-market. I don't know what it ended up today, but it was like up 4% on the news. I was like, this is smoke and mirrors. Like this is not a real win, in my opinion.
No, it's not. And the fact that they spent all the money they have to do it, it's like we spent all this money to even have the ability to compete with this guy that's like already crushing everyone. You know what I'm saying? It's like the 50-pound kid taking on the 200-pound muscle. It's just like it doesn't. Well, hey, I bought a gym membership. You know what I'm saying? Like, sure, maybe one day. That's actually a good analogy. You know, imagine I want to fight some guy that's 6'5", 275, all muscle, and here I'm coming in with nothing. And I tell the world, hey, I bought a gym membership. Are you betting on me to win that fight in the next month or 6 months? Right? Maybe 3 years, maybe 4 years. But again, think of it, you'd have to track my performance. Am I really doing it? Did I take enough steroids? Right? Like, am I juicing enough? Like, am I going to beat this guy? That's what they're saying. We bought the equipment to maybe do this thing, but we also spent all our money to do it. And to be honest, it's something we don't already do. So we don't really know how to do it. We just have some idea how to do it.
Also, I'm like, again, they've had this partnership already with ZT, but you're also not thinking about the cannibalization of, you think HPE, Dell, and Super Microcomputer will be less or more agreements with AMD going forward when they just essentially create a competitor? Exactly. So now you're taking that agnostic approach that AMD has with everyone away for what? A low margin business. To put an example, like ZT got acquired for $5 billion. They were making nearly $10 billion in revenue a year. They're trading at 0.5 price to sales. That's essentially showing they have no moat. Server business, highly competitive, low margin, not scalable. What are they seeing in this? It just doesn't make sense. Like, oh my God, it's just crazy. It's weird. But again, Lisa Su is a great CEO, great visionary. So maybe she has some mind, but I think they're going to dilute shareholders, to be honest. Like, I would not be surprised. Like, hear me out on this. Catches the bid, trying to catch some kind of bid of some kind of narrative of like, oh, they're doubling down on this investments towards AI data centers. And all of a sudden, when you get 160, 170 range, you'll get some kind of dilution. They're going to raise funds. They're going to do something. And
They have to.
that's when they're going to turn on shareholders, and shareholders are going to punt it down even more.
So did anybody, so let me just ask you this quick poll. Did anybody else see any of that coming? Or is anybody else looking into it going, yeah, I saw that. I get that. Or did that help elucidate what is occurring right now in the market? This is a little fast feedback session. We want to make sure you guys understood the point that we're trying to get across. Okay, here's why. So that you understand it. I don't want to just force feed you information. I want you to get it and learn from it and become smarter. Michael Anthony asks, what about HPE, which is part of Nvidia?
I think HPE, if it's a great mature company, I think they're same with Dell. Like, they're both great mature companies. Its server side is only one leg of their business. Doesn't get me up in the morning. I think it's just nice. I honestly, in the AI thematic, like, again, once in a decade thematic like AI, it doesn't come out that often. Like, we get maybe once every 10 years if we're lucky. The last time was cloud. Before that, it was the internet. Like, we don't get that many chances at these kind of revolutionary thematics. Don't go for the safe play, which is Dell, HP. Like, just don't hit for those home runs. Like, you think that, like, yes, there's gonna be some failures, but like,
this is
I guarantee there's some people who probably bought HPE rather than Nvidia because they were scared of this like visionary component of Nvidia in the digital economy. Went for the safer route. Guess what? That's how millionaires are made, in my opinion. Is like taking that risk, but educated risk, knowing the thesis, and knowing that the reward outweighs the risk and going for it. That's how millionaires are created. And I think right now we're at a time where the chances of becoming millionaires are diminishing because of what AI is doing for society. The rich is getting richer. The disconnect between the mass volume of people and the rich is widening and widening to this point where it's going to be really difficult for the people who aren't rich to become rich because of all the tools that AI is creating for the rich and wealthy. So like, take your swings right now, in my opinion, with educated research and guess, but that's my take on that.
I agree. Thank you, Michael Niles. I'm glad. I appreciate the support. If you didn't, go ahead and follow Shay's his links at the bottom, or you're following from this account or his, either or. You're on it. Make sure to get in there. So we've talked about a few of those. Let's talk about the pick that you released this week. I want you to just kind of give me a quick 5-minute walkthrough. Like, what did you see that made this really stand out to you so much so he's like, dude, we gotta put this out? And if you're not in the email list, Porter, if you could drop the link in the chat, and we could drop it on X too.
So
on the email list. Yeah. What were you looking at? What tickled your interest here?
I'm going to try to say it without giving it away because there's a couple components of it I think will give it away.
They want to show your chart because I can never get whatever the moving average that you use. I just can't ever get it on.
Oh, I don't have that anymore.
Okay.
That's the issue. But the ticker, I mean, the company. So there's a small cap. I think this is like the next Rock Lab, next Jumia. Like, I think it's one of those, like, what? Oh, you're talking about Celsius. Are they talking about the?
Yeah, you released that one this last week. Like,
I thought you were talking about my upcoming one on Wednesday. Oh, they're talking about the one I'm about to release. Okay, Celsius. So falling knife. If you guys aren't aware of what happened with Celsius, it had an insane run up the past couple of years. I got in the low teens. It got all the way up to $100. I sold 50% of position, $80, because the valuation is getting way up there. Why is that? They don't have the recurring revenue nature of a tech software company. It's a purely consumer goods product. So as soon as it was getting rated as a 60x PE or it's trading near 60 times their price to earnings, I was like, oof. Usual sweet spot for a brand like that, if it was growing at like a decent, not great rate, is like 25 to 30. So as soon as that growth funnel was going to shut off, in my opinion, I was like, it's going to get re-rated aggressively. I thought that was going to happen in 2025, 2026. It happened this year. Their growth, I was underwriting them growing top line 50, 55% this year, 40% next year, then goes to 30% in 2026. That 30% growth is happening this year. So that huge conversion of hyper growth investors to value, that period of re-rating is a lag. Nobody knows how long, but it's aggressive and it takes some time. And that's what we saw of Celsius hitting $100. The earnings revealed that 30% top line growth. It got all the way down below $40. And when it went under $40, that was like, all right, their PE now is like justifies around the 30-ish range. They're still, in my opinion, like they have an 11% market share in energy drinks. Like that's a ton of runway still. I think Celsius, it had some FUD headlines of like it's not healthy for you at all. Of course it's not healthy for you. It's healthy for an energy drink, but it's not healthy for you. And I think they still have a massive presence with millennials and Gen Zers. Like my fiance is 25. Like her and her friends constantly still drink it when they work out. Like it's still got a massive presence. It just needed to get re-rated, and it did. And I now knowing that the fundamentals finally make sense. Where's the bottom on the chart? So I showed in the Discord group and an email that we sent out like, oh, that 200 week on the weekly moving average on Celsius was at 36.50. Guess where it bounced recently? To the cents at that point, it just had a V-shaped recovery. So, oof, that's my tell. Buyers came in at that exact trend, and I think it's going to start recovering towards what I believe is a fair valuation for the stock is above $50. So knowing that, I was like, all right, I'm going to buy some $50 strikes on Celsius. Now that it bounced, I pitched my fundamental thesis on what the company was, where my buy points will be. And yeah, right there is a great right there. And I think it's going to be a magnitude of 50 psychological level. But again, this all hinges on their international thesis because Celsius just started going international last year in like Canada, for example. It's just beginning. I think that's the next leg of runway for the growth for Celsius. I think domestically they'll do fine. However, consumers are struggling here big time. I don't care what the retail sales numbers say. Like I know consumers are still struggling, and they're going to have some kind of headwind domestically, but internationally, ton of runway. So once it recovers $50, I think a lot more buyers will come in because it's not just a falling knife, and we'll see from there. But that $36 move to $50, that right there is a 25%, 30% move that you can just like happen within weeks. And I think we're kind of seeing that right now.
Stocks Buddy just went so your pick came out here is about 36, 37 and change. It's already up about 10%. Stocks Buddy just said, I'm down. I love it. Stop loss 39 and change. So that just triggered bullish on the daily. Hasn't turned over on the weekly, but also definitely oversold. The RSI just kicked right back up too. I'd say you get an easy test of 48, like right up to the bottom of this gap, 48, 49, right where you're saying, well, you said 50, right? So pretty much with give or take a buck. Yeah. I mean, that's an easy move. You got gap opportunity right there. This thing could absolutely rip. I love it. I just retweeted it as well, you guys, and I popped that on our Twitter. I put Shay's link in there, retweeted his post. I can't believe 190 people didn't guess the next one. It blows my mind. And that's a lot of guesses.
The beauty of it, it's a small cap.
Yeah, that's what I'm saying.
And we're about to enter small cap season too. I'm stoked.
Yeah, so we'll see. So that's it. All right, so let's get into some smash or pass. You know the deal. You drop your ticker in the chat, just one ticker per comment. Feel free to leave 10, 20 comments, however many you want. We'll pull it up on the chart and FinViz, get a quick look. I'm talking 2-second snap reaction, a yes or no. Love it or hate it. This is not financial advice, but it should help you in your decision-making process. So drop your tickers in the chat, flood those comments. I'll wait till some of those start popping in, and I'll highlight you. There, we get to it. So this one, as we've said many a times, I don't want to buy something that maybe tracks Bitcoin. I want to buy Bitcoin. Like, I don't want to buy a stock in hopes that because Bitcoin is rose to prominence, that the stock may appreciate too. I just want to buy Bitcoin. So that's my 2 cents. This one also trades religiously in this range. Like this, consider this Mars religion, 28 to 5 to $7. Now it's starting to consolidate 19 to 28, but we're trading below, which means we're basically oscillating between 16, 17 and $7, $8. So until it's over 19, I don't want to touch it. Then yeah, I could go to 28. But again, I'm going to make more money, in my opinion, long term, putting that into Bitcoin. Your 2 cents?
Yeah, just buy Bitcoin. Just buy the BTC. There's so many spot ETFs now out there that like are connected to spot Bitcoin. Like, just go through there. You don't have to worry about dilution. Like, these companies are just going to dilute to buy more Bitcoin. It's just a weird scheme, in my opinion. But
it's a weird scheme, dude. It is a scheme that is appropriate. 2030 a bust. I hope you bust anyway, my friend. All right, DKNG. Here we are, Draft Kingles. You got a nice tidy little range there.
Short term, I think it's a smash because football season's starting. I think
they'll get.
I think there's going to be great. I think college football betting is going to be pretty extra this year because the college football video games reigniting a lot of interest in players. Long term, I think this is a bust of a company long term. I've been very vocal. I don't think this is going to be ever like $100 stock. It's going to be it's just such a catch-22 because once it becomes federally legal, in my opinion, a lot of bigger players will come. I think Amazon and Netflix are going to be the next major players to kind of hit the space. Apple as well. Like any kind of big tech company who is starting to get into live sports will inevitably have their own platform for sports betting. It just doesn't make sense not to. The synergy is way too easy for that to happen. And once that occurs, that market share DraftKings has will diminish. And I don't know about you guys, I have zero loyalty with betting platforms. Whoever gives me the most cash up front to gamble with
for me lately,
I'm just going to go there. There's no loyalty, and the cost of acquisition for customers will only increase, my opinion, once the bigger players come. And I think it's a commodity of a business that needs to be infused in some suite of products, and I don't see a place in the next 5 years.
Agreed. So I think that's getting a pass. I'll tell you right now, this one's getting a hard pass. Just looking at it real quick. Just look at the chart. Nothing but down ever. Yeah, it's a scam. So
I will say this about this
cash
company.
grab.
There's a massive difference between producing cars and producing cars for profit. They will never, ever be part of the second category of what I just said. They will only produce cars. It's going to go PE. It won't be around in 5 years.
Yep. I concur. ET. God, you guys in these energy deals. You guys in the energy place. I feel like it's the one area neither of us ever really pay any attention. Energy.
Energy is always the crypto of tech, in my opinion, because like if you're not bullish on a risk on trade, you go to the value, and energy is where value is.
Yeah.
So
I'd say the chart at least doesn't look bad. You got room to $20. I'm sure this is a dividend pair. The chart's not bad. Unless you get a rejection here, it looks decent, actually. If you want to just hold for upside and dividend payout, I actually don't hate it. All right. Cools. FL. Fruit Loops. Just kidding. It's Foot Locker. Oh, damn. Looks like I even mapped this out and then didn't follow it myself and could have made a bunch of money again. God damn it. Did I map out these buy levels and then it hits exactly and then just rips back up for double your money? And I didn't get any of it. I suck.
Stay away from retail stocks, guys. Like it's gonna get worse. The consumers, it's gonna get worse. So like I would stay away. It's just dead cat bounce, any kind of bounce you see.
I would agree. I think McDonald's was just releasing some data that showed that even with the reduction of their cost to like whatever the $5 meal or whatever is again, they didn't see the rush they thought they'd see. The only thing I will say is this. I think it's hard to differentiate for McDonald's the difference between health conscious and budget conscious and how much overlap is there, right? Because it's kind of been outed over the last couple of years how trash that food is. Did you see that meme where it's like moms are doing where it's like, well, I ate it as a kid, but then they show the ingredients then versus now? Like back then, it was just like potatoes, a little bit of salt. There were not a bunch of additives. Now it's like all sodium penthiotate, blah, 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 like unpronounceable chemicals. So they've basically gone cheap and they try to chemically engineer them rather than just make them. So
it's nasty.
I think they're cooked. Like I think McDonald's is dead and done.
They own the real estate, so that's an interesting of like they have the luxury of figuring something out. Like
they'll pivot and find something to do. I mean, at a certain point, like just sell the shit. I mean, God, dude, how old do you got to be at this point? Just tap out, man. You played the game, you won. Just go away now. It should be like a sense of monopoly where you get to just eliminate some people and they go home. Like put them on some sort of island or something. And congratulations, you've won. Now we take what you got and we redistribute into the economy. Not giveaway, not socialism, but just redistribute those pieces to be played by other characters.
Well, they need to do more collaborations with like pop stars. That Travis Scott collaboration, like all those like fun things that people just went to McDonald's just to get like whatever collaboration products meal that they offer. Like I think they have to go more on like that to get like the more volume coming back in. It's gimmicky stuff like that. I think that's their next.
Do you remember as a kid what was the reason you would yell at your parents or somebody to take you to McDonald's?
I love the Big Mac and chicken McNuggets.
But you get what I'm saying? I want the toy. I'm talking about when you're a kid.
Toy.
I want the toy. And those were like movie Power Rangers, like all the big Pokemon, like all the big, you know what I mean? You're right. That McDonald's has leaned on brand partnership more than anyone else.
Yeah.
So I wonder that if they can't find partners, that'd be an interesting thing. You know what I mean? Because it's just trash. And people know it's trash. They treat their employees like shit. Nobody cares. So Snowflake did explore lower local lows since we started buying this, but I think that this is an outlier, that 105. This is my biggest regret is that I didn't get this or CrowdStrike on that free the free money grab. But you win some, you lose some. As I said, sometimes I just suck, and that's just what it is, man. We're trading this, and we mapped this out for everyone. This were kind of our demand zones. We did say the first time we streamed and talked about this one, we said we're buying anything under 100 as long as nothing material changes in the business, or anything under 120. Excuse me. So I hope somebody was better than me and bought more. Otherwise, we've been buying 125, we can buy up to 147, target of 163 and up, inevitably long-term target 308. I would put this one in that same category as your Palantirs, your Robin Hoods, basically your IPO, pop, boom, long consolidation over a 2-year period, and then a boom.
So that boom's going to occur February or March of next year. Their Q4 earnings of this year is going to be home run. Fireworks. First off, I don't know if you know this, Oz, their earnings are on Wednesday. So that's the next big catalyst for Snowflake. If you guys want to potentially get in before that. But Snowflake, nothing.
I was going to ask you to come on the earnings stream Wednesday for Snowflake if you can.
Yeah, maybe I should actually. If they're up 140, I would do it. So Snowflake, for example, like nothing's gonna be eye-opening this quarter. Like I really think the bear commentary that's overshadowing the long-term bull thesis, because it's how it works, is like, oh, they have no part of the post AI enterprise AI space, data warehouse company that's diminishing due to competition. blah, 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 blah. That's all short-sighted because right now it's a story stock. They're story stock in the AI space. I'm seeing anecdotally, I'm doing channel checks. Like I know this company really inside and out. I don't expect much this week. I think they're going to have really strong earnings of showing like, all right, the things are way better than what the stocks indicate. They're going to have a soft guide because the macro environment for business spending is still like getting better, but it's not good. And this is Q2 of the new CEO. They're going to be more on the conservative side because they're still building those go-to-market AI products. They still are, and that's not really bringing in revenue yet. A lot of people from the channel checks I've been reading are excited about it, but they aren't bringing actual revenue. And because of that, they're going to conservatively guide conservatively. And again, it'll just be good earnings that people will just say, oh, it's still like the bear thesis is alive and well. And I think in Q4 of this year, the people I've been talking to, that's where we're going to see like the aha moments. So as long as here's a key level, like when would I actually turn bullish on Snowflake on stock price? Pull this up. Come on. I think it's my computer is just freezing. Either way, it's still in a stage 4 chart breakdown, and I don't love being aggressively bullish on stage 4 unless it's a stupid price. Like being below in the low 100s, that's a stupid price. Like that's like no brainer. Again, this is for 10 plus year investors. Like you're gonna wish you can buy the stock in the low 100s. You're going to wish it's going to be a $300 to $400 stock. It will be. I don't know how long. It just will be. I'm overweight in this position already. And it depends on your timing as an investment. Like, again, nothing will be that thesis breaking this earnings quarter on Wednesday.
Yeah, 189. This has got pretty decent short-term potential too. This thing could snap back 189 like it's nothing. Like take your lunch to 189 and change. I mean, we had this move back in April of 22. This is the weekly chart here. In 1 week, we went 163 to 224. So that shows you how powerful this breakout over 163 will be. That's why that's a critical level, because there have been 2 instances where this has ripped from 160 to 180 up to 200 plus in one event to 300. And then vice versa, it's sold off from 300 down to 113 in less than, say, 20 weeks. So that shows you that this is like a high velocity liquidity zone where if the bulls come correct, earnings are great, and the market is strong, boom town, it's up, it's gone.
Well,
you're going 181, 190, 200. Like
also, if we continue this run up in the market and it feels a little frothy how quickly V-shaped recovery is, a lot of people's eyeballs will be what's the highest quality lagging stock out there. Snowflake is still down 34% this year, with the Qs being up 17%. That's a massive delta of like lagging. I think a lot of people might reposition towards those. If things continue upward, like those lagging high quality names are just going through an investment year that are going to prove fruitful down the line, and they want to start repositioning towards those names. That's why, like right now, Tesla's still down 10% for the year. Snowflake's still down 34% in the year.
Right.
MongoDB 37%. The list goes on. Like these are the high quality names that you can see the repositioning occur once things start getting better as the macro starts improving.
Right. And again, I'm just talking chart here, man. We've ripped from 125 to 203. Dude, this thing just the right data, the right time with a little bit of froth. I'm with you. That I think this one could even give us like a pre-read. That's fantastic because you look at what happens in a very confident market. Investments go towards riskier investments.
Yeah.
Rather than being in value, they start rotating into this. You guys saw this. We told you, okay? 2021. I would argue that both him and I were probably the first to tell you this. Tech is the new value basket. And AI will shape the way the next 20 years looks. We were buying some of these names back in 2021. You were already prepared. It's our point of like how psychotically we try to analyze and predict these trends. If money starts to become a little funnier, like meaning a little more confident, a little more jovial, these are the names that see that reflection the quickest. And when they see them the quickest, then it compounds, right? Because then the rest of the market goes, well, oh shit, everybody's going back into tech. They must be pretty optimistic. So then that actually fuels the tide of optimism that could, I think, turn the entire market really towards a ridiculous run. That's it's weird because it's justified and it's not. It's justified in the sense that I think if you really pace inflation, we're just staying at the same actual value. But because it takes more dollars to equal $1,
Yeah.
The valuations appear to be going up, but really purchasing power remains stagnant, like true buying power. Do you know what I'm saying? That's my
No,
whole
100%.
conspiracy with this market right now, is that nothing's actually changing. These are just, I don't know, I guess you could live in as commodity in a sense. Like it's purchasing power that stays the same while value climbs. It's not real value, it's arbitrary, I think.
100% agree with you on that. One other comment I want to make on Snowflake, because I get this question all the time. For the 10 people, for the people who attended our Traders Paradise, you know the model I'm about to talk about really in detail. What's my model saying on my stock price for Snowflake? They've clearly lost their tier 1 valuation. The market doesn't think they belong in that tier 1 valuation among growth tech anymore. That's why you're seeing them go towards the 120s. Is because the market's re-rating them as like, oh, you should be in line with your peers rather than that tier 1 multiple. Palantir at $32, $33, they have a 25% premium valuation against any of their second leading, like any of their peers. Like they're head and shoulders above, way above everyone else on peer valuation, because the market's saying like you deserve this tier 1 valuation. CrowdStrike, similar thing in the 400s. Like they're like, you belong in the tier 1 cybersecurity evaluation, like head and shoulders above everyone else. So where's Snowflake if they can regain that tier 1 premium valuation? Like I believe they will. Like I do believe once the market sees that they're actually going to cement themselves in the enterprise AI space and they have a future as one of the leaders in it down the line, where's the stock going to go? Just using Palantir as the comp for Snowflake. I know different niches within the data ecosystem, but I think that's the best comp in my opinion until Databricks goes public. Snowflake for Palantir trading at $33 right now. Snowflake needs to be trading at $260 to have the same valuation. That right there is over 100% gain. So that's why, like, oh my God, if Snowflake proves to the market, these are insane numbers. Rule of 40 score of 60 plus, increasing margin expansion, revenue reaccelerating, tier 1 valuation associated with Snowflake. That's 240 to 260 level. That's why I can see like an insane move for Snowflake once they prove in an earnings report that things are actually not just way better, they're improving and we're guiding up on all fronts. Right now, we're not seeing that because they're in an investment phase in their business cycle of investing on these AI-related expenses with no revenue recognition associated to those investments. But that's temporary. That's going to change. And I'm underwriting for Q4 earnings of this year for that to occur. But maybe I'm wrong. Maybe it happens earlier. So that's why I'm not touching my Snowflake position. I added at 108. I will add more in the low 100s, but it's already a 10% position for me. So I'm overweight. I'm just going to ride it out.
Yeah, if you look at that, that's 6-1 risk reward from here, even trading off local lows as stop loss. So 17% downside following that model, 103% upside, 6-1. So for every $1 you risk, you're making 6, which is more than appropriate. 1 to 3 is quality. So just to give you that little tidbit there. All right, enough time on this one. Let's keep it going. I got to get back up on the list. There's quite a few. Pradeep, NCK, is that McKesson? I think somebody is asking about this last time. So we charted this one out for you last time. Here's your reality. Either maintain this trend right here and you consolidate, or you find yourself at 469. So for me right now, that would be that'd be a pass. I don't like it. Never even heard of this. CONY. Title ETF coin option. So let's just talk. I don't even know what the hell that means. So we're just going to look at Coinbase because that was also suggested. This one we've had mapped out. The entry here for us was $70. So this is a trade that we've been in already. Please take that into consideration before making any decisions. But again, yet another reason to join and get access to this info so you're not hearing about it after it's run. But we mapped this trade out. We wanted the golden retracement to 213. That's what our target was. As you can see, we entered at 71 and it hit well above that to 286. So triple your money, triple your fun. We need this above 215 for continuation. I think they're the best position to do well. If crypto runs, their trading fees are egregious now. So they're going to make a lot of money if crypto starts running. Which
watch out for watch out if once Bitcoin clears 70K at Coinbase very quickly. I think that's like the breakout level of Bitcoin. Right now it's basing. Crypto is actually not as bullish as you'd assume it is. It's kind of more on the bearish engulfing side. But as soon as it clears 70,000, it's gonna fly in my opinion. And I might buy some like 2x leverage Coinbase ETFs like the Granite Shares offers. I forgot. I think it's CoinL. I think it's called. But like, either way, I'm going to do a trade for sure because it's kind of waiting for that breakout to occur. And I feel like that psychological level of 100K is going to be a magnet once it clears 70,000.
102.
Yeah.
Bitcoin being currency will trade to the technical perfectly.
This will also be a massive tool for both Trump and Harris in leading up to election. They're going to be pulling this lever to get as many votes as possible. And there's going to be a lot of read-throughs on like crypto as being a sympathy play on whatever they say. Like, first of all, I think Trump fucked up on that Bitcoin conference, not like going even harder to get that audience. Like he didn't do a great job. I think they're going to
then you got the social that comes with it.
100%. Like, it's just like it's such an easy lever to pull for both candidates that I could see it like having some kind of bid. And once it clears 70,000, there's gonna be so many traders that are gonna get in. It's just gonna fly.
Yeah, 100%. And so I think what we need to be conscious of what he's saying here is that get your trades ready because when this occurs, it's going to be fast and you want to capitalize on it maximally. But I will say Bitcoin north of 58 is in good standing. North of 69.5 is where we really have some fun. This will be good trade. I have roughly 10%. I'd say I have about 10% of my money in like allocated specifically between Bitcoin, Ethereum, and like one or two others that are a little bit of flyers. But like I'm not participating in all the garbage and nonsense. I put like again lotto ticket. I always put like $1,500, $2,000 into like into SHIB. Doge turned like 100 into 30,000 for me. So that's where I got my crypto starter. Yeah. Made 30,000%. 30,000%.
Oh my God.
Yeah. I did it live on YouTube. Actually, it's kind of fun. You should watch it. I told him 77 cents. I'm out. It was live because you could just see it. Like, this is it. It's over. I bounced, exited the whole thing. It hit like 77 1/3, something like that. Or I don't know. Maybe that's AMC, whatever. Both of those were live on our YouTube channel. Go check it out. Not you, but everyone else can if you want to prove what I'm saying. But yeah, 30,000%. So it was $108 into 30,000, and then I rolled that into 100K, and then I took a little bit out, and then now it's like at 70 or so.
Wow,
so
it's incredible.
Like 10% of shit into. I think that's good. I mean, I know Fidelity's even doing like 7 to 8% for their 401ks. But I personally want to have, like, ideally, I'd have 15-20% exposure. Just pure Bitcoin, cold storage, locked away.
Oh shit!
That's what I would do.
I'm bearish against crypto, but I have a 1% position because I'm not a schmuck.
I mean, it's
if they're right, you have to have some kind of crypto exposure.
Yeah, exactly. So again, you guys, this is all based on your own. Like, clearly, I'm willing to send it. I'm willing to take that risk and send it with a substantial amount of money. That's not the best choice for everyone. I'm just personally willing to do it. So we'll hit this real quick. Unfortunately, Path has taken a beating. I think you labeled this as one that would be it would be collateral damage of the AI run,
Yeah.
right?
So I think this is interesting. All right. So going forward, I don't want to commit to this, but I wrote a short report on short report on Mobile Eye a month ago. It's down 60% since then. I have another short report releasing next week, not this upcoming week, next week on a new company. I think I might going forward on the newsletter, like sneaking in some of my short reports because like Path was another one in the mid 20s. It was like, this is wild because this is going to be a dud that's going to have private equity because of what they specialize in the RPO. AI is going to solve all those repetitive, tedious tasks that a lot of the analysts or the lower people use UiPath for the enterprises. AI is going to replicate that product. And again, I've been very vocal about this. To know which companies will be cannibalized in the post AI software world, look at their product, look at the code, what product can be replicated with AI. UiPath is a perfect example of that. I don't know what the price action will be going forward because like they still print cash. They're still like somewhat profitable in their enterprise partnership, but I'm so forward looking. Like I think the next 10 years, this won't have a place in the public markets. It's going to go private equity. And again, this is another one that's down 50 to 60%. Does it catch a bid here? It's definitely basing. I wouldn't be surprised if it does some kind of dead cat bounce to 16 to 18 bucks.
I don't hate a $12 buy. I'm not gonna lie to you, but I don't want to play this torrid dance again.
Yeah.
Because I had a lot of path from like 15, 16 that I don't have anymore. So it's been tumultuous for me. So I'm gonna submit one for myself. Takeda, dude, swooped right in. You ran this one, didn't you? Didn't you run this in your model?
Yeah, I got some juicy scores for sure.
Wow, huh? Wow,
yeah.
right? So $13. I had him. I was like, hey, just throw this in there, see what it says, because it's one that I like more than the others, and I've been building. I have probably too large of a position, if I'm being honest with you. But I got an itch, and I got to scratch it. I just have a feeling. And they're well positioned, and they haven't gotten the love they deserve, but volume is coming to the party. So, yeah. So, all right, let's keep going. Lunar, no idea what that even is. Lunar. What was
Space
that
company.
one? What was the one that was like all over Wall Street bet? It was running. It was crazy. It was like Lumen or something.
I think it was ASTS. If not that, space, maybe SPSCE. I mean,
I thought it was like Lumen or something. Maybe it was this.
No, that does autonomy driving, the lasers for it.
That volume swell. Is this
yeah,
turd bottoming out?
Oh, they're fucked. They have a 26-year-old CEO who took it public. Don't invest in a company with a 26-year-old CEO. Just don't.
I agree with that. I'm gonna tell Wolf you said that. I think he's
on a public market.
Wonder if he's going. Chart wise, I don't know anything about this company. Maybe he does. I'm sure he does. Yeah. This looks like it has AI all over it. I'll tell you, you got a good base here at 387. North of that, I would say this is a decent trade because you have an easy 50-cent loss with $1.25, $1.30 target. I think this would be an easy trade. Potential is $6. So, what do you think?
Yeah, I mean, they got a massive NASA. It's a space company, so they got a massive NASA contract. I think right now all space names are running. Planet Labs, ASTS. Lunar is another one, like Rocket Lab. Clearly, like they're all catching a bid because they've been written off for dead for years, and the high beta risk on trade right now is all eyes are on space economy. So this is catching a bid. Like they're all just catching bids as a bucketing approach. I don't think Lunar is anything specific. I haven't dug into it too much. Just because like I think Rocket Lab's a clear leader, so why go for like.
Yeah, second banana.
Third or fourth. Yeah, it's not my thing. And fundamentally, it doesn't look that great to me, but it's catching a bid right now. If it clears looks like if it clears 430, inevitably it's going to hit the next resistance, which used to be a support of like 510. So that's a 25 to 30% move it can have really quickly.
Okay. All right. Let's see. Where is it? Crowd. There you go. This one has absolutely ripped, dude. God.
That's so funny. People thought this was actually going to go to zero after all that. That just shows how bad the FUD was in a name like CrowdStrike. Love the bounce. It still needs to clear $300 for me to get bullish.
Oh, agreed. So, but this is what I think really matters here. We mapped out, like, originally our low end target for a buy signal was 220. We wanted to see, remember we mapped on the stream, we wanted to see it down. This is when it was breaking below 250. We were talking, let's see 220 and a good rebound, and you got a lot of strength there. And sure enough, that's about what it did. It went a little further because that was a macro outlier event. So short of that carry trade debacle, this would have hit 220 and held. But I think just the additional pressure, that's why it also got scooped back up in damn near one candle. It did one candle. So clearly the market ate it back up. I would say that's a huge indication of long-term strength to reapproach that long-term target we laid out of 429.
Yeah, I mean, I do have a thesis on first off, CrowdStrike reporting I think next week. So that's going to be probably the most polarizing earnings of the whole season. Everyone's eyeballs will be on there.
Mm-hmm.
I kind of think if anything so drastically like eye-opening on the downward, like revisions or taking away from the guide, they're not going to wait until the earnings report to do that. I think they're going to pre-announce. So I think an interesting play, like for me, I'm actually looking into is buying some 250 puts for December 20th as a hedge, thinking if things are actually as worse as they can't quantify the impact from that Black Swan event, they have to take the guy down completely. The market will hate that and freak out. FUD will make this, it's a stage 4 breakdown of the chart. When it's in a stage 4, any kind of FUD will shoot it down and it's a falling knife. If that occurs, I want to be protected, and it's not going to lose their IV because the earnings is going to be a pre-announcement before earnings. So like, I do think if they don't pre-announce, it won't be as bad as people feared, and it actually might catch a bid. Because the way it was being priced in with that 50% correction in a month, you have to ask yourself, like, what's being priced in? And I think a 20 to 25% growth, if they can beat that, I think the name will catch a bid. I think the market was like seeing like, oh, it went from 40-something% to potentially mid-teens. That's going to be worrisome. And that's why it was getting re-rated. So like, again, I think if it's really bad, they will pre-announce it. If not, it's going to be better than feared. You should. I'm holding, like, it's still a top 3 position for me. I got in at 120, 130 as my average cost basis. This is definitely going to be in my 10-year plus portfolio because they still have the best endpoint product in the market, 11% market share lead. I think it's only going to increase. This black eye, people won't remember in a couple of years, in my opinion.
No, I don't think they will either. I think that it's always an overreaction, man. It's always. And I think you got combination of a few elements, like we talked about, like that macro carry trade fallout, collateral damage was like too much. That's not typical. So you saw a bigger rubber band snap. It's a rubber band, guys. The farther you pull it back, the more likely it is to break. But on the other hand, if it doesn't, the more it's going to hurt when you let it go. And so if you look at that in terms of price action, either it breaks and it's done and that sucks, or that thing snaps back harder than you can imagine. I think that's what we're seeing here is bad news on top of bad news. One of those pieces of news was related to the company and what they were doing. The other was not. But because they were riding already on bad news relative to company, I think it's like getting kicked in the nuts twice. Like right when you start to catch your breath again, you get kicked again, which sucks. So it's like you've been kicked for one long period. But you could see that the market rejected. So that's all this is, you guys, is tug of war. And the sellers were pulling it down, and the market immediately rejected that. Said, no, you're not even close. That's ridiculous. Popped right back above 250. And that's where we'll fight it out, because that's where the market's like, you know what? Is it worth 250? Is it worth 220? I don't know. We'll fight it out here. But the sellers did not have the strength to fight it out below 240. They just didn't. So keep that in mind. That's all this is psychology at work. And when you see these candles, these are visual representations that they're just telling you that, look, the market rejects your offer for this stock to be priced at $200. Because when they're hitting the bid, right, they're just selling into the bid, trying to shell the demand. At a certain point, the demand overwhelms, which is what you see right here, and the market rejects their offer of a lower share price. That's all that's happening. Is we're all just fighting back and forth on saying, this is worth this much. No, it's worth this much. And some people are doing that based on what it's actually worth. Some people are doing that because they heard from their brother's friend's ex-girlfriend's barber that this stock could go to $1 million. Like, there are so many reasons that people are doing this stuff. Your job, our job, is to be on the right side of the trade because it's backed by the data. Not on the side of, well, because we hope so. That will never work. Hold and hope is not a strategy unless you're going to church. And even then, I would argue it's not that effective. Everything in life requires action. Mm-hmm. So if these companies aren't moving the needle, providing a better forward guidance, providing a better corporate governance, a better corporate structure, a more optimistic outlook on their market segment, then there's no reason we should be buying it. It's that simple.
Also, some caveats, like you can buy stocks like UiPath all the time when they're catching and falling, like they're down significantly. Like those kind of stocks, they'll find a way to find new lows. Best of breed quality growth stocks, they rarely go on sale. If they do, it's because of some one-off black swan event that created so much FUD that it sold instantly. So you're going to get that kind of exposure to catch those sales, you have to buy into fear. A lot of people don't feel comfortable in doing that. They'd rather buy the UiPaths that look like it's basing from a triple bottom, but still down 90% from their all-time highs. But they look cheap. So they go the safe route. When really the real money's made long-term is buying those dips on those high-quality names that had that one-off fear, and they're just going to recover from it and get new all-time highs. Meta is a great example. People are freaked out by Meta on metaverse spend, and a lot of those headlines a couple years ago on like what they did on their products. You had so many chances to buy below $200 on Meta, and what is it right now? It's at $500. That fire sale, so much FUD associated with it. But if you participate in buying into that fear, you benefited off a multi-bagger and a high-quality company like Meta that's going to be around for years and years and decades. Like, find those names that offer you that dip to buy those generational buying opportunities, and names that will be around in 20, 30 years, because a lot of these names that are out there, they're just going to do these little bumps, bump, go the PE route because they don't have a tangible place in the capitalistic world, in enterprise or whatever space industry they're in. So that's my 2 cents on that. Like, when there's fear, it's okay to participate and buy into it, because that's when the fire sales occur.
Yeah, and I think it's opposite market dynamics. What you saw 5 years ago is everything went from PE to public markets. And now it's like, oh, shit, we got to roll that back. Now they're going public markets to PE. It just doesn't work. Sometimes you got to flip the script. And, yeah. But there you guys have it. You got the picks. You got everything boiled out for you. We'll be live premium only stream Friday. You can get your access by going to those links, sign up, get in there. Most importantly, though, the most important sign up you will do to get your pick this week, which is the next hot pick, the growth pick that 190 people couldn't guess, along with the Big Short report. You need to go to @StockSavvyShy, go to his Twitter, click that link, grab your free access. Do not sleep on it. Do not miss it, or you'll be left behind. You already missed out on, 10-15% on one pick in like 5 minutes. So if you have $1,000 in your account, you would have gotten paid $100 to read an email. Congratulations. So don't miss the next one. So love y'all. Stay blessed now. Bye-bye.